Eric Mwathe with Mwathe.com with a weekend market analysis for the weekend of April 25th, April 26th, 2015. Let's take a look at how markets ended on Friday. We can see that the US markets were pretty much positive at the close. NASDAQ closing at a fresh all-time daily closing high. So that got to get the bulls a little bit excited. We see that crude oil was down, and we see that gold was also down on Friday. For the week, the NASDAQ was up 3.25%, closing at a fresh all-time, get this, weekly closing high. You gotta love that. I mean, I don't care whether you've been bullish, bearish the last couple of years. This is impressive. If you go back to 2009, 2008, I guarantee you nobody thought the NASDAQ would be trading close to 5,100. I bet you nobody. So it's absolutely impressive, I have to say. S&P 500 was up 1.75 and it closed to at all-time weekly closing highs. Take a look at the Dow. The Dow was up the least 1.42%, and so that's how we ended the week. All right, let's take a look at the weekly charts. We begin by taking a look at the NASDAQ. NASDAQ again closing at fresh all-time weekly closing highs. Yeah, and we are now above the previous recent weekly closing high of 5,026.42. As long as the market is holding above that level, you have to respect the potential for upside. So again, one of the things that we've been watching the last couple of weeks is this wedge, and we did close exactly at the top of that wedge. So this is where the market is going to have to decide whether this is going to be resistance coming into the new week, or if it's going to finally break out above that wedge. Obviously, breaking out above the wedge is going to be bullish. Otherwise, if we cannot hold and we break down below the wedge, that's going to be bearish. If we take a look at the NASDAQ daily, again, and I have to say this, you got to be absolutely blown away with this market. I mean, what the? So this breakout here last 2 days, a breakout plus a follow through, man, this is classic. So as long as the market is holding above 5,026.42, man, you gotta respect this. We continue holding above this wedge or this trend line going back to October of last year, so that's holding. And if you recall, a couple weeks ago we had come back and tested the 50-day moving average. We tested the 50-day moving average and that line again and held, and the market started moving higher. So here we are. So the key is whether we can hold above 5,026.42. The more we stay above that, the more we are in another accelerated move in the market with a chance of closing at fresh all-time, or at least breaking intraday highs on the NASDAQ. And so the price level the NASDAQ needs to move above to make all-time intraday highs is 5,132.52, going back to March of 2000. So if we take a look at the RSI on the daily, we see that the NASDAQ did finally manage to move above this declining line, which might explain the accelerated move this past week, the last 2-3 days. And now we are looking at, if you go back to the prior line we had been drawing a couple of weeks ago when the market was in pullback mode, we came to this line, and this line did give us multiple reasons to think the market was going to bounce because of support on this line. So that was good. And also keep in mind that we saw the market come back to the 50 level on the daily RSI and hold. It held above that line with uniform activity. So that was another indication that the market was still healthy. Now, the one red flag is that if we take a look at the market's most recent drops over the last year, so I'm just going to draw a simple line. here, and that red line corresponds with the biggest drops in the NASDAQ. We can see there was a drop here, and that drop began when the NASDAQ slipped below this level. There was another slight drop here, which was during this period, this break, and there's another recent pullback here. Now that also began around here. So what I'm getting at here is, now that we did close exactly on that line, depending on how the market reacts to that red line, if it shows resistance, that would indicate the RSI pulls back, and also indicates that the price could also pull back. So that's the one thing on the NASDAQ daily that we need to watch going into the new week. Let's take a look at the Dow. Now, unlike the S&P 500 and the NASDAQ, the Dow failed to close at fresh weekly closing highs, and the level the Dow does need to break out above is 18,140.44. So that's the level it needs to jump above. Right now it did look like it was gonna break out this week, but it never even got as high as the previous weekly closing high. So there's a problem there that the Dow has yet to follow through, but just because it did not do that this past week doesn't mean that it can't do that at another time. So we have to be aware the market could still eventually break out. Just like the NASDAQ, we can see that the Dow continues to show this wedge on the weekly RSI. So at some point we are going to resolve outside of this wedge for either a bullish move or a bearish move. If we take a look at the Dow on the daily RSI, we can also see another trend line where the market closed exactly on that line. So either we are going to see resistance on this RSI line, or the market finally can break out. So going into the new week, we'll see whether we are going to get resistance or whether we are going to get the market breaking out to finally give a chance for the Dow to record fresh weekly closing highs. If we take a look at the Dow Hourly, we can see that this is where there's a little bit of a problem, because if you take the RSI line connecting the top side of the Dow Hourly chart, you can see that this is where the market has been stalling recently over the last couple of weeks. Every time we come to that level and stall, the market pulls back. In fact, if you go back to the high, RSI stalled there, market recorded a high. We came back and we did show resistance here for another pullback, double top resistance here for another short-term high. So yes, we can see that at the end of the week we had another resistance level, showing that this could also be another short-term high and a reason for the Dow to start pulling back. We take a look at the 30-minute chart for the Dow, and we can see from the price that we had broken this trend line off the high. So off this high here, we made a fresh high there. We had declining RSI strength at the time, beginning of March. Finally, we did break that trend line here, and that break has been tested on many occasions. So there. So this line goes back to the break like that. You can see that the market has been coming here and pulling back. It did the same thing here. Did not get even that as close as that resistance line. So there is some type of resistance here. And there is also another resistance if you take this line here connecting the recent price highs. Right there, which connects the highs there, here, and now here. So lots of resistance levels. So again, we see, let me just draw that again. There's this line connecting the highs like that. The market came here, hit that resistance. So clearly, if the market wants to move high, it needs to break out above that red line. On the RSI, on the 30-minute chart, we see that this is an area of resistance also. So for the Dow to move higher, it needs to break out above this line. Otherwise, this is already saying that we've already seen resistance and we should expect the markets to start pulling back. Let's take a look at the Dow Transports, and we can see that finally we seem to have held the line that we've been watching over the last couple of weeks. So this line has held, and it also did hold above the previous 2015 weekly closing high. So those two lines held, and since then it looks like the Dow Transports are starting to recover. And also we had talked about this line here. Now this line I draw like that because it is the line that connects the previous breakout level on the weekly, and I discuss this pretty much every weekend nowadays. So this entry here, and since then this line has become support. Simple line but with a lot of hidden information. Uniform activity here, another support level, and now we touch this here, which is this lows. We are touching it this past couple of weeks, which is there. So the Dow Transports, they also seem to be recovering, which is good for bulls. If you take a look at support around the 50 level, you can see ever since this move above the 50 on the Dow Transports has been using RSI 50 level to bounce every time. Even here, it bounced on the 50, which was those lows, and now bouncing back above the 50 for these lows here. So even the Dow Transports, after looking like they were breaking down, finally did find some much needed support for those who want the market to go higher. Now here's a bearish argument, and this bearish argument can be seen on the Dow Transports. It's a very simple line that you can see here, that if you take the highs and draw a line, it connects to a couple of the recent highs on the RSI here, here, and now it hit that level on Thursday, seem to be pulling back. So as long as that's resistance, I would expect this market to struggle for now until that resistance is cleared. Also, there's another view. So there are two lines there. The other second line is this line right there. As you can see, since the highs here, this line has been resistance each time. This simple line has been telling you when the Dow Transports could stall here again, which is that, and now we are coming here and showing resistance. So we have two lines. If we can move above those two lines, the market could rally. Otherwise, right now it looks like it is telling us that this is where we should expect resistance. So again, I'll draw those two lines. Line number one showing resistance right here, and then line number two that is also showing resistance right there. Both of them did already show resistance as of the close of Friday. So maybe this is one of the reasons, if you are trying to find a reason to be bearish, that's one reason. If we take a look now at the S&P 500 weekly, which managed to close above the previous all-time weekly closing highs, which were at 2110.30, so we are above that. So that's a fresh all-time weekly closing high, which means that the bulls are in control. Again, the only problem here that I can see is on the RSI, we are back to a level where the market has been stalling. As you can see, this trend line, this wedge, continues to be a problem here. So until we can break out either above that for a bullish run, or we break below this wedge for a bearish run, this market is sideways in my opinion as far as the weekly RSI is concerned. Eventually we are going to get a very strong move one way or the other. So for somebody to claim they know which way this is going to break, I think that would be a little bit tough to tell. But if you are bullish, you want to see a breakout to the upside, and if you are bearish, you want this wedge to break to the downside to confirm downside potential. If we take a look at the S&P 500 daily, we can see, yes, we close at fresh all-time daily closing highs above the previous daily closing high of 2115.48. So this is exactly what the bulls wanted to see, a fresh daily closing high. They got that. Now we come to the RSI. The RSI seems not to be confirming that as of right now. This could easily become resistance, this topside line. If the market can continue building on this small move here and continue above that line, that's bullish. Otherwise, this could very easily turn into resistance. And that's just a simple line connecting the highs here. Above that, the market is bullish. If it shows resistance, expect the market to pull back at least some. Take a look at the S&P 500 hourly. And on the hourly, just like the Dow, we see that the RSI is showing signs of exhaustion. We've come back to the most recent highs on this line, and as long as this is showing resistance, I would be very suspicious of this current move. If the market can break out and trade above that line, then you can be bullish. But in my opinion, this is something that you cannot ignore, because the more this is confirming resistance, the more the indication is that we eventually do roll over. And one thing, if I was to go back to the daily chart for the S&P 500, so for the daily, if the S&P 500 for some reason cannot hold above current breakout levels, if it moves below 2,115.48, that's going to be a failed breakout. That's going to be a reason to be a little bit cautious of what the market is trying to say. Also, if the weekly moves back below the previous weekly closing high of 2010.30, any move back below that price is also going to be a red flag. And just a quick reminder, if you watched last weekend's market analysis video, I was thinking that the market was going to move higher because of this wedge on the VIX. So the VIX, in my opinion, was giving us a sell signal because it failed to hold above this line when it was moving higher last week. So that was a sell signal for the VIX, buy signal for the market. And we also saw that the VIX had come back to this declining RSI line, and the VIX was showing resistance. And the conclusion there was that if the VIX was bearish, then the general market was poised to move higher. Also, we talked about some type of indication that the VIX was stalling based on the hourly chart. If you go back to last weekend's market analysis video, I had drawn a line connecting the highs of the VIX. The VIX had come back to this line and did show resistance. And since the VIX was showing resistance, I was thinking that suggests that the general market moves higher. So I don't see anything here that necessarily means the VIX is a buy. Yes, I can see some type of support here. Maybe it starts moving higher slightly. But from last weekend, we had seen that the VIX had given us a nice sell signal. In fact, there is also this red line where the VIX has been stalling over the last 1 or 2 years. Every time it comes to this level on the hourly, it stalls. And every time the market is a buy. Let's take a look at Apple. We can see that over the last couple of weeks, it's been holding steady at the 200-day moving average, 50-day moving average. So that's the 50-day moving average that held, which is good for those who want to see it go higher. We also talked about support coming on the RSI lows line like that. So we had seen this support. The thinking there was that the market would start pushing this stock higher. If we take a look at the monthly, we are seeing that we continue trading with the RSI nicely and firmly, trading above 69.10 since sometime middle of last year. So that move above 69.10 looks good. We are seeing a fresh breakout on the monthly above the previous current monthly closing high. So the previous monthly closing high, and that was at 128.45. so 128.46 actually. So that's a fresh breakout. That's the level we've been watching. So if you are watching that level, that was a trigger to go long and see whether you can see higher prices. We also talked about the weekly chart giving a buy point for those who want to play breakout. There was another buy point on the weekly. If the stock can stay above 129.50, that's a fresh weekly breakout. Otherwise, if it cannot hold above that, then maybe it is due for a pullback. So it needs to stay above either 128.46 on the monthly or 129.50 on the weekly. Otherwise, a move below either of those two prices could be asking questions about the strength. So let's wrap this up by taking a look at the monthly charts. We begin by taking a look at the S&P 500 monthly, which is breaking out also on the monthly above the previous monthly closing high. If this market is to see higher prices, then the S&P 500 needs to hold above the previous monthly closing high of 04.50. That's the level to watch. As long as it's holding above that level, this continues to be a good market. Take a look at the monthly RSI continuing to hold above 69.1, which is great. Let's take a look at the NASDAQ monthly, and we can see that on the NASDAQ, it too has been on breakout mode, and it needs to stay above the previous recent monthly closing high, and the level to watch there is 4963.53. So as long as it's trading above that previous monthly closing high, take a look at the strength of the RSI, which continues to be trading above 69.1, going back to the middle or early part of 2013. So as long as that's the case, with the market trading well above 69.1, you have to respect the upside. Let's take a look at the Dow monthly. And I'll have part 2 of this market analysis video, so there'll be a part 2 which I'll send to subscribers sometime during the weekend. And so we can see that the Dow has yet to break out. So the Dow is being a laggard. It needs to break out above all-time monthly closing highs of 18,132.70. Now, if you are skeptical about this market and you don't want to play the upside, you can actually use this price range. If the Dow cannot move above 18,132, then there's no need for you to join this market in its current push higher. But if the Dow breaks out above 18,132, you have to be careful, because this is very strong. That would also suggest that the Dow has moved back above 69.10. So if you're looking for a reason to throw some cold water on this market, then this is the level you can say that the Dow has failed to break out on the monthly, the Dow has failed to break out on the weekly, and definitely the Dow has failed to break out on the daily. So that you can hang your hat on that if you're a bear. That nothing wrong with that, but I would say be careful if it breaks out. Otherwise, for subscribers, I'm going to have part 2 sent to you. I'm going to record it during the week and the weekend, and I'll send it to you once it's ready, maybe on Sunday. Otherwise, enjoy your weekend. This is Eric Muade. Good luck, peace, and blessings. Woo! E-A-C-S. Mwah.